ICT Trading, the most successful marketing campaign in retail trading history. Part 1. Fair value gap. Order block. Liquidity sweep. Breaker. Judas swing. Silver bullet. Optimal trade entry. Inversion fair value gap. Balanced price range. Turtle soup. Sounds like a language, right? Like something institutional. Like there's a real system behind it. Here's my question, and I want you to sit with it for a second. What result would make you conclude that ICT doesn't work? Think about it seriously. What losing streak, what drawdown, what number would make an ICT trader say, okay, the method is wrong? There isn't one. There's no answer. And that's not me being unfair to anyone. That is the entire problem, and I'm going to show you exactly why. Part 2. Let's be precise, because I'm not here to make things up about anybody. Michael Huddleston, the Inner Circle Trader. Over 2 million subscribers on YouTube, thousands of hours of content, and credit where credit is due. The content is now completely free after he shut down his paid mentorship program. He is not charging you $1,000 a month anymore. That's a good thing. I'll say it plainly. So why am I making this video? Because free is not the same thing as harmless. The cost of ICT is not the price tag. The cost is 2 years of your life, 3 blown prop firm accounts, and the belief that the only reason you're losing is that you didn't study hard enough. That's the actual product, not the concepts, the belief. Part 3. Here's how a real strategy works. You define your entry, you define your exit, you define your risk, you run it over 200 trades. It produces a number. That number is either positive or negative. The strategy is accountable to reality. Now here's how ICT works. Price sweeps the low and reverses? Liquidity grab. Textbook. Price sweeps the low and just keeps going? Then it wasn't real liquidity. It was heading for a deeper pool. Price never sweeps at all? Wrong time frame. You should have been on the 5-minute. You took the setup and lost? You entered the wrong fair value gap. There were 3 of them. You picked the wrong one. Every single outcome has an explanation. Every single outcome is consistent with the model. Nothing can ever contradict it. A framework that explains everything after the fact predicts nothing before the fact. That is not trading. That is astrology with candlesticks. And this is exactly why nobody in that community ever concludes they're wrong. The method has an escape hatch for every possible loss. And that escape hatch always points back at you. Part 4. One of the most common criticisms of ICT is that it takes concepts that already existed and gives them new names. Let me be concrete about that. Order block. That's a supply and demand zone. Traders have been drawing those since long before YouTube existed. Fair value gap. That's an imbalance. A gap. Price moved fast and left a hole behind it. Every price action trader on earth already knew about this. Liquidity sweep. That's a stop hunt, as old as markets themselves. Optimal trade entry. That's a Fibonacci retracement zone wearing a new name tag. Now, is repackaging illegal? No. Is it even bad? Not necessarily. Every teacher repackages something. But here is what the repackaging actually does. It manufactures the feeling of secret knowledge. When you learn the word supply zone, you know you learned a common idea that everybody has. When you learn a bearish order block within a premium array above the equilibrium of the dealing range, you feel like somebody handed you something from inside the building. Nobody did. You got vocabulary. And vocabulary feels like an edge, which is exactly why it keeps you watching. Part 5. This is the part that nobody in that community wants to talk about. There are educators out there who publish independently verified track records. Audited. Third party. Open the statement. Look at the numbers. That is the standard. Huddleston's own trading performance has never been verified that way. I'm not saying he lost money. I'm not saying he's a fraud. I'm saying something much simpler and much harder to argue with. There is no audited, third-party verified, multi-year profit and loss statement from the man who calls himself the mentor of your mentor. And there's a documented history that makes this genuinely awkward. Back in 2016, there was a public attempt to trade $10,000 up to $1 million. It failed. By his own account, a long winning streak brought him close to that goal before the whole thing came apart. Now think about the asymmetry here, because it's insane when you actually
learning a system from a person who has never once had to show a verified statement. Meanwhile, you, if you want a funded account, have to pass a strict evaluation with hard drawdown limits, daily loss limits, and consistency rule.